Okay, guys, thank you so much for holding on for those few minutes while we got everything situated and let everybody come in. Again, we want to welcome you to tonight's Real Traders Webinar weekly event. This is the first of 2014, and before we get started, I just want to remind everyone to please shut off all distractions, your phone, the email, Facebook. There's going to be a ton of value given away here tonight because we have with us 20-year trading veteran Mark Nicholas. And for those of you that know, every time Mark has presented, sometimes he's presented with Kevin McClanahan, but tonight he'll be going at it solo. But every single time Mark does a presentation, it just blows everyone away. There's a ton of value. So you definitely want to pay attention, shut off all distractions, and take notes. For those of you that are not familiar with Mark Nicholas, he is the founder of Day Trading Zones. He's a contributor, consistent contributor to Real Traders Webinar. He got his start in prop shops and hedge funds, and he's been trading his own money for most of his life. And he's also a mentor that has been teaching for over 10 years. And tonight, he's going to be sharing with us his 2014 best strategies, processes, and goals. So make sure you get ready to take notes. And let me see if Mark, are you there?
Yes, good evening, everyone. Sound test, 1, 2, 3. Thank you for the introduction, Kevin. Okay, cool. Good evening, everyone. Thank you, Gary, William, Angel. My name again is Mark Nicholas. I'm the founder of the daytradingzones.com. I have been a trader just like you for about now 20 years. Started when I was 20 years old, 21, let's say almost 21. And I started in the professional circuits in prop firms and the hedge funds until I was able to accumulate enough capital to trade on my own. So tonight it's going to be a cool event because this is an event that I've done on Tuesday night with my own community, and we were going over 2014 and what is it each year before the year starts. I review my trades, I review my yearly commissions, I review my yearly P&L, I review what are the goals, what could I do better for next year. And I wanted to structure the year and share with everyone, as many people as possible, what would be my goal. And at the same time, within the next 45 minutes, we are going to share your goals. Because at the end of the day, the trading, this is what I've done all my life. And this is also sharing your goals, your obstacles, and what would you like to overcome in 2014. So in 2014, there's a couple of themes that I want to re-emphasize and really drill into everyone that is interested in trading and is really passionate of making this work. There's a couple of themes. So the theme number one is the idea, if everybody can see the slide, the theme number one is to get high probability trades and stop the clicking and spending the entire day watching at the screen with low probability of success. Meaning that if you look at the distribution curve of probabilities, and you've seen it if you come before, this is very dear to me because it took me years to really ingrain this probability and this bell curve to the point of applying and executing that bell curve. Now, a lot of people are going to understand it, but very few people are going to execute and do. And everything is in the doing in trading, like most of the things in life. And so the bell curve tells you that if you have a bell curve and the current price of a stock is $100, there'll be a distribution, okay, with an implied volatility with the year where you expect on your chart, it's like a support and a resistance, to have your trades going from one side to the next. So if your implied volatility is 20%, it means that you expect the trade of a stock to go from 120 to 80. And essentially, when you take the trade at 100 here, smack in the middle, everybody, you have no edge. You have no edge, and you have no statistical edge of making money. And this is very profound because a lot of the people, everyone, trade right there. And this is where traders get in trouble. They trade smack in the middle at the current price with a 50% short with no increase in probability of success. So I'm going to show you in blank charts before I show you automation, how it's being done, how I do it, and how it can help you. So some of the stuff I'm going to share with you is I do it every day with real money, okay? And I have done it for almost 20 years. And some of the stuff you are going to resonate with you, and some of the stuff are not going to resonate with you. But if you can get out tonight with some few ideas that I'm sharing with you tonight, with years and years of experience, tears, blood, and real money traded to improve your trading, then I've accomplished my mission. So how do you improve from trading in the middle to have a higher probability of success? So one thing that you do, everybody, when you look at a chart, can everybody see that blank chart? Quick yes, no? Okay, cool. Cool, thank you everyone. I have a problem with the, hold on one sec, Kevin. I'm saying the questions, but they, okay, cool. Thank you, Tracy, Alex, David, Abby, Josephine, Kim, everyone. So here's what happened. When you look at a white chart, first and foremost, pull 2 time frames, a monthly and a weekly chart. And I want to show you on the white chart with no automations, how automation starts for a computer, how we did our automations based on the stuff that I learned in professional trading with our full Pro Tool or our DTZ analysis. We went through all of this, going through the same processes as what I'm going to show you. The first process that we do is we look at a trend, everybody. And you want to see on the monthlies and the weekly, you want to identify what is the main trend here. So if you look at the SPY since 2009, you see that parabolic move of higher lows, higher lows, higher highs, higher lows, and higher highs. So if you look at a monthly and a weekly, the trend is up. And on any given day, you will have something called the intermediary trend, which is being given to you and shared in your charts to you by your 60 minutes and your daily. So for instance, if your intermediary trend is up and your monthly is up, well, everything is pointing to buy that day, right? But if you come in the morning, which I wake up every morning between 5:45 and 6 a.m., if you come every morning between those hours and you look at your 60-minute chart, and I have my tools and I look at the way it's being structured for the day, you might come up in the day and look at, for instance, your Apple charts for the past few days on the 60-minute charts and your daily, and you think, whoa, hold on, the monthly is up, but now the intermediary is down on the Apples. So what it could be is an intermediary retracement. So let's say you have a series of higher highs, higher lows, higher highs, higher lows. And let's say you have a support on your 60-minute charts or your daily, that's what I use, and it comes back here on your monthly and weekly support. So if your monthly and weekly support is right there, let's say on Apple at 515, let's say, or 528 on your monthly and your weeklies, but your 60-minute charts and your daily shows down, then we as traders have to wait. We have to wait for that retracement on the monthly and the weekly to trend within the trend. Because there has been a lot of people, if you look at those charts since 2009, that keeps on looking for the top on the SPY and the top on the Googles and the top on the NFLX and the PCLN. And all you end up doing is trading against the main trend. And when you trade against the main trend, you are going to be crucified because 90% of the traders lose money. And the people that lose money are the people that are not patient for that intermediary trend to form and retrace to the monthly, weekly trend. Does that make sense, everybody? Because it takes years and years of doing to understand that it's not worth it to try to pick up every top, every bottom when you trade. What I'll do when you trend within the main trend, what you'll do, everyone, is reduce your cost of churning, like you're paying your broker commissions, you'll reduce the numbers of trades that you do. So you'll be more clear on the trades that you are executing. You'll be more focused on taking those few trades per year that are going to make you money. Because at the end of the day, when you go and sit at the dinner table with your wife, your loved ones, and my wife, before I went through a nasty divorce, my wife used to tell me, hey, did you do well today? She couldn't care less if I did one trade for the day or I did 100 trades for the day. But you know who cares if I did 1 trade for the day or 100 trades for the day? It's my broker. Because the broker gets paid whether you win or you lose. And as a matter of fact, being the end of the year, I'm talking about goal strategies and processes that can help you in 2014. You look at those and it'll be very, very powerful for you guys to see on your 1099 how much you've spent in commissions. And you will see, and it's going to be staggering for most of you guys, that 20 to 30% of your win on your gross P&L or your losses are going to the broker. So whether you win or to lose, then you understand the broker wins every time. But you, when you make 100 trades and you spend all day in front of a computer and doing trades at 50% chance with no edge, no real probability of success that can increase that 50-50 to a 68-95% chance, you are gambling. You are not gambling because you are purposefully gambling. You are gambling because you don't know. You just don't know what you don't know. When I first started and I passed my licenses, my Series 75563, and went trading for the prop shop, I just didn't know what I didn't know. And there's a lot of stuff, especially within the first 2 years of a trader learning curve, that you just don't know. And it'll take years and years to understand that, yeah, I want to look for trades that have 68 to 95% chance of success. Yeah, I want to trade every day the best profitable hours of the day, which are 8 a.m. Eastern time, okay, to 11 a.m. Eastern time, and that's it. Those are my rules, you know. Between 11 and 12, I'm looking for time decay plays where I create monthly and weekly cash flows with probability of success of 68% to 95% and overlaying our probability tools and our zones, okay? But you have to know what you don't know. So one of the things that took me years to understand is to wait for the fringes of the main trend, the monthlies and the weekly retracement, okay? Wait for the 60 and the daily to retrace and buy. You were better off buying here at this cluster low, at this cluster low, on retracement on the SPY, at this cluster right there, instead, and at the cluster right there again, instead, or Amazon, sorry, we have Amazon now, I switched to Amazon, rather than chasing that parabolic move. Same here. Let me show you one that was a killer for traders in 2014, and that's a monthly chart. So look at this one. Look at PCLN. Look at PCLN since 2009. You know, boom. You know, 54, 75, all the way to 1200. So here's the first probability of success step. Trading within the main trend. Do not fight the main trend. Wait for the intermediary trend to set up to your monthlies and weekly and just trade those trades, because those trades are powerful. You see those damn flag within the trend. That's what you want to trade, and you look for a cluster low and a cluster high within those flags. What is a cluster high and a cluster low? Look at this. This was resistance here. That resistance break now becomes support here, becomes support here, and on the third touch with a shift of momentum across, recross, vroom, new high. Same here, cluster low, 2-point form a channel, so it's a parallel line. Okay, same here on the top. Net seller here. Second touch, third touch, higher low, cross, recross, higher low, vroom. And you have your move. So each time within the trend, in 2011, in 2012, in 2014, 13. If you want to kill those trades, that's how you would do it. People ask me, how did you do 6.6 times your money in 1 week? In 1 week, when I was at Thanksgiving holiday at Atlantis with my boys, okay, in 7 days, which you'll have access at the end of this webinar to a free training series video that shows you that trade and explains some of the philosophy that I'm showing you right now. How did I do $23,000 and use a trade where I invested $3,500 and that trade became $18,000 of real money, which will give you a link at the end on the training series. And this is by looking at the Apple, waiting for the retracement on the net seller, net buyer channel. The overall trend is long. So what I do is when I'm looking for a long, same on Apple, I was looking for a long on the bottom of the channel. Let me show you Apple quickly and we'll move on with some trade setup and some examples. By the way, we'll have to open our Ninja Trade Navigator and let me show you Apple after. So we go to Apple and you look at the same thing. So Apple since 2009 made higher low, higher highs on your monthly charts and then started doing a double top. But what people fail to see is that double top, see that cluster around here, around that 400, was nothing else than the top or around the top of 2011. Okay? And if you look at the monthly day trading zones, they were negative, and then they turned positive. So you want the trend, the main trend, you want the intermediary trend to know where you buy on the retracement, and you want to look at your support and resistance on the white chart. So look, if I pull a weekly chart on Apple, and you look at that chart since 2013, because a lot of people have asked me, why were you so bullish on Apple since July? Well, look at the white chart. No tool, no automation for the moment. Look, cross, recross, higher low, and you start making a new high. So like now you have your middle part broken. Okay, so all that cluster that was around here is broken. Then you have that cluster here broken, and so forth and so on. Here the same. So here there was a little cluster 513. I don't know if you remember after the earnings on Apple, 513, 528. The week before Thanksgiving holiday on November the 22nd, I leave after 5 weeks of looking at this pattern, 1, 2, 3, 4, 5 weeks. After 5 weeks of looking at that pattern, I look at 3 touches. There was 1 touch, 2 touch, 3 touches, and on the 4th touches on November the 22nd, everybody, I took the plane for Miami, then took a boat for Atlantis. I entered those positions. I entered 5 contracts of the 525 Apple, which was at the time 2 strikes out, 1 or a couple of contracts at the 530, and I had 1 contract of the 500. That 525 contract at 480, which you'll see in the video, that with real account, went to $32. $32. That less than $3,500 investment turned into a $19,000 investment. Why? Same principle. I trade within the main trend of Apple since July. I wait for the retracement, which was 513, 514, 518 area there. I buy on the higher low, and I just let it play itself. You know, I put a stop loss if it's done correctly. You have that type. I mean, granted, it was an exceptional trade. You can make those type of trades. You don't need a 6.6 times your money. Even if you make a 50% return or 100% return, you should be extremely happy. So now that you've seen this, there's some trade setups that you need to understand when you trade support and resistance. Okay, so let's see if you see the Trade Navigator. What is it that you see? Do you guys see the Trade Navigator, the DTZ Trade Navigator? Not sure what you're saying. See that? Now that's think or swim. Okay, cool. Okay, now this is the broker account. This is not the trade navigator. So let's see if we can show you the trade navigator quickly. So within those support and resistance, when we do the DTZ analysis, we focus on 9 markets. So I have a screen completely dedicated to this 9 markets, and I focus within those 9 markets to those 6 markets. So mainly, most of the day, I trade directionals SPY, and I'll explain you why. I have long gone scratch DES, and I'll explain you how the SPY is so much more powerful than the ES. And also, what I look within those support and resistance is cross, recross, and shift of momentum. Okay, so Sherry, everyone, I'll be glad to answer every questions on the Q&A at the end of the hour. But there's a lot of stuff I want to cover with you. Okay, so when I look every morning, I'm looking at a couple of markets that I want to master for day trading. Usually it's the 6E. If I do options, I substitute that for FXE. If I use the crude, I do USO. If I Apple, Google, ES, I use the ES chart to trade the SPY. And what I look within support and resistance, which you can trade within your own support and resistance, is 3 trade setup that you must master. So let's go back to the white chart. And within those trade setup, I create buy zones, sell zones, and caution zones for the day. So essentially you are not gambling in the morning. You have a blueprint for the day where I spend from 5:45 a.m. in the morning to 8 a.m. analyzing the market. And I start on the full Pro Tool where we have automations done, which I'll show you the same trade, let's say on Apple. Let's go here. Let's go here. And here's what I do. Let's put an ES chart. Okay? And you'll see it's going to be telling. So you pull a daily, a 60-minute chart, okay? And what you look is some patterns within those clusters. So let me show you something. So we know the overall trend on the ES was long or SPY long. So let me show you since the FOMC. So here's one pattern. Let's look at this pattern right there. Let's look at this cluster right there. And you are going to see on white chart how clusters are extremely powerful to help you trade. Here, here. And we'll keep it like this to keep it simple because there's so many more concepts I want to go and share with you for 2014. And I want to share and hear from you what you have in mind for 2014. So here's a cluster. Here's a cluster. And what we do is we trade 3 trade setup. And again, if I go a little too fast, you can get the free PDF at the end of the session with those free training videos that shows you the Apple trade done during my Thanksgiving holidays with my sons. And you'll see how those trade setup are being done. So I want to go back here. So if you use a 60-minute chart every month, okay? Do we all agree that this ES and the SPY was on an uptrend on the monthlies and the weekly? Quick yes, no. Cool. So what happened during the FOMC meeting, I had 200 contract on the SPY long that day. And I carried some runner and I carried also a credit spread that I'm going to show you that were 176, 175, or 175, 177, one of those two there. And so here's what happened. Again, what am I waiting for? Within the main trend, you wait for the retracement from the intermediary trend to the main trend. So look what happened. So he went to the resistance and went to test a third time, you know, that cluster. And then he did what I call a cross, recross. When he recross your cluster low or your net buyer or your support, when you have a cross, recross, it's a high probability trade to go long. Whether you use a weekly chart, a monthly chart, or 60-minute charts, depending on your time. I use 60-minute charts for day trading or for intermediary trend recognition. but I use the monthly or the weekly. But what happened with the day trading zones is we automate everything to put everything into one chart, the 60-minute chart. So you have a cross, recross, you have a shift of momentum. Here's another one. Cross, recross, retest higher low. This is one of my best ones that I love the most. Is the cross, recross of your support, retest with the higher low, boom, okay? And it breaks the channel. It goes to the next one, same here. You have the channel around here, okay? It cross, recross, it retests your channel like that number 3. We call that number 3 within our own setup. Cross, recross, retest, lower high, and boom. See what the ES has done from 40 all the way to 19, okay? And then again, they go back and they come back to that resistance. So see how powerfully, just visually, everyone, without any tools, you can do that. Quick yes, no. It's pretty cool. I mean, this is stuff that alone, visually, are very powerful because look what happened. They keep on repeating themselves. Support, 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 resistance. They pass, cross, recross, they go to the next resistance. And so you have a lot of stuff like this that starts the automation process for tools. So me, what I do, so if you go back to the same charts and you look here on the ES or the apples, what I have is I have it completely automated. See, I have the up arrow for immediate trend recognition change, up arrow, down arrow. Blue dot is a 60-minute, it's a 60% continuation of the trend with a probability of 60%. And now within the trend of the weeklies and the monthlies, I have those thick blue segments that gives me a retracement area with a high probability to retrace and buy again. And so if you look again here and you look at the weekly, this week, this is where they went. They went to the day trading zones dashes too. Okay? And that's what happened. You play this thing. Look, that's what happened. They went close to the weeklies, the dashes, cross, recross the dashes, boom, back again above the dashes. So you want to automate as much as you can. If you look at a 60-minute chart and you are a day trader, same. You want to automate those stuff as much as you can. See? You have your pink dot, you have the blue dot, and you do automations after automation. Same on a weekly Apple. If you look at a weekly Apple, and everybody says Apple now is a dude, well, we don't know yet if it's a dude. Here's what happened. Look at the weekly day trading zones. We had pink dot, and down arrows since 2012. Down arrow, pink dot from 608 all the way to 400. And then you had a cross, recross, higher low from here 423 to the 600. And now look what happened. I have a pink segment on the weekly that indicates that there's a shift of momentum and that we have to be careful on Apple to come back to the support of Apple, either to that cluster at 414 or 507. And everybody knows that the previous cluster was 530. So going into earnings, 530 and 510 here, 510, 514 are key. But am I going to short Apple? No. Here's where I'm going to short Apple. I'm going to start shorting Apple when Apple is below 500. Because now I have a shift of momentum on the main trend. Does that make sense? Granted, we had a nice move on Apple and I was out of Apple, and you look at my trade. I run that trade from 518 to 557, 565 on my runners, and I was out of the trade. Now I'm not looking to short it yet. I'm looking to buy back on a pullback, which is 514, 528. That's it, bottom end of the story for now, until I have a shift of momentum on the weeklies and the monthlies. Also, I use the MACDs, with those two MACDs, which you can use for trend that can help you, everyone, which is those two MACDs are widely available, which is the 12.26.9 and the 6.19.9. One is for the immediate trend and one is for the long-term trend. So now this is the first step of the goals this year. So you take a Word document and you can start like this. So you write it, goals 2014. First goal, trend, main trend only directionally. Okay, so this is one. Okay, and I explain how you do that. The two is using the proper cash flow and wealth strategy, okay, for 2014 that gives me, or you, in this case, gives you 68 to 95% chance of success. So now let's go to the second part, which is my two favorite, wealth and income strategy. So let me show you, and before I start this slide, it's a very cool slide that we put together to understand options at its base. There's a lot of people in this room that might be advanced in options, but they might not understand exactly how options work. So I'm going to explain that. Just before I do that, who doesn't trade option? Let me give me an idea of what you trade right now, just like in the room. Okay, Gary trades futures. Josephine, who trades futures? Options or forex only, like pre-forex. Armando, options only. Armando is the smart one. Futures, Bruce. And I'm going to show you before the end of this presentation how you can, if it's interesting to you, how you can control 10 add the money SPY weekly option for about $1,000 and control 2 ES contract with only $1,000. Is that something that would be interesting? Danny, futures. Armando, another Armando, forex. Arif, options. Dimitri. Okay, cool. So here's how options works and how you really have to structure and understand options. And you'll understand how most of the market maker, the hedge funds and the pension plans work and make money. Okay, you got to understand the power of a time decay. So let's assume you buy an option. And a lot of people in this room, including me at a point of my life, we've all been burned with options, okay? Especially being a buyer of options. So here's what happened. If you buy an option for $1, a lot of people don't understand that this $1 is comprised of three things. It's comprised of real value in the options, time value, and volatility. What most people do not understand, so let's say you buy a weekly option for $1, okay? And you buy this option for $1, and it's a weekly option. So you buy it, let's say, on Monday, Tuesday, Wednesday, Thursdays, and Friday. What you don't understand is that $1 is comprised of those three elements. By Friday, that time value of 30 cents is going to accelerate on the last hours of Tuesday to nothing, to zero. And what will happen is that you essentially just bought a $1 asset on Monday. So you buy it here, $1 on Monday from someone who sold it to you, who is going to sell. So he sold it to you, and your asset on Friday at expiration on the weeklies is going to be worth 70 cents. So my question to everybody in the room, who is making the money when this turns to be zero on Friday? Who is making the money? The buyer or the seller of the options? The buyer on Monday or the seller of the options that knows that every day that he keeps that 30 cents, that 30 cents keeps on going down and down and down. And it's a pretty cool 30% return for the option seller. So now, who is that going to be usually? Well, most of the time it's going to be the market maker. So here it is. See, by expiration, boom, this gets to a cool $0 for the seller, and he gets to screw you, the buyer of the options, 30% of your investment by Friday in 5 days. So what happened is the market maker play that game. The astute professional traders play that game. Okay, who else played that game? The hedge funds. Okay, and everybody in the planet, okay, that is part of the 10% that takes all day in from the 90% that lose money day trading, buying options. Okay, so I do directional play, but 80% of my cash assets are selling premium, and 20% of my cash assets do directionals on the SPY, and I'm going to explain why. And they are not only doing the SPY, but I'm doing small directionals with low premium. So let's go to the broker account. So here's an example of an SPY credit spread that I've done on that FOMC day that I showed you. It's real money, unlike a lot of the trading webinars that you go into. So I did 10 contracts on FOMC day, FOMC, on December the 18th, and I sold that for 33 cents, which you can see here. And look what happened. How much is it worth today? And it's going to expire at the end of this week. $0. Zero. So I essentially crushed the entire premium. Can everybody see that? Quick yes, no. So some people in the room say, hey, I'm not going to make a living with $330. But when I combine the day trading zones that day on the FOMC with that cross, recross, and that retest higher low, and I looked also at the deltas for that day, and the deltas, they sucked that day. When I took that spread that day, the delta told me that I had 60% chance to 58% chance of making money. But I knew looking at the day trading zones by having a cross, recross, retest of the monthly and weekly day trading zones on my 60-minute charts, I knew that I had an over 70 to 80% chance of making money. That's the big difference with the people that trade only the delta and the 1 standard deviations and 2 standard deviations only, and don't look at the past behavior charts of the net buyer, net sellers on your chart. Does that make sense? Because that alone can change your trading, especially if you are an options trader. The options trader, even when they sell premium out of the money, they wonder, hey, I just took a trade that had a 90% chance of success, and I don't understand. There was an earning, and next day, I lost everything. You lost everything because you put all that trade on earning season on the delta, on your probability in the money, and this is wrong. This is where support and resistance are the most powerful things that you can look in the market, the past behavior of the market, the past behaviors of what's working. So you might tell me another way of understanding why selling options is key. Do you guys see the SPY? This is my favorite options that I buy. I buy put and calls every week on the SPY to substitute my ES. Instead of trading the ES, I'm going to show you how you can trade the SPY with 10 times less capital, same risk, and making about 5 to 300 times more money with the SPY options. So look what happened. Do you guys see the bid and ask spread around the at the money options? They are 1 cent. 1 cent. Okay? 1 cent. That's a fantastic way where I can get in and out 10,000 shares every day, 100 contracts, 200 contracts, even 10 contracts if you have only $1,000 to invest. You know, in and out on the bid and ask. But look now the circles on PCLN. Look at this, and that helps you understanding also bid and ask spread for any futures and forex pair. If you buy, you are the sucker buying the spread all the time. Look what happened here. Do you see the option here? Look at those bid and ask spread. Do you guys see a $1, $1 spread on a $14 stock, everybody? If I take my calculator and I take 1 divided by 15, that's a whopping, a staggering 7% spread, which means that the buyer who buys at 15, look at his chart and suddenly realize he's wrong, he has to get out right away on the bid, lose 1 point. If you do it on 10 contracts, you just lost $1,000 in split seconds. So now again, who makes the money on that market making situation? The buyer or the seller? You just start with a 7% deficit, just buying the option. And then by Friday, your weekly options, they are worth nothing on the time value. So not only they get you on the spread 7% here, but they get you also on the time value of the option. Do you understand now why most of the buyers of options are losing money? Because the game is rigged for the sellers, not the buyers, but for the sellers. And I want you guys to understand that to get to the SPY now. Now, the only thing that I allow myself to buy on my 20% cash allocation is the SPY. Why? Look again. Look at the SPY. Look how many contracts are traded in the SPY. 145,000 contracts traded for this week. Look at the volume for one day, 41,000 contracts. You can get in and get out with a lot of volume, a lot of open interest on those. And you know what's cool on those two is earning seasons have no impact. Meaning what? There's no volatility crush with volatility here on the ETF, which mainly I trade the SPY. Okay? So I trade mainly the SPY because of that volume. I can get in and out 10 contract to 20,000 shares, 200 contract on the bid and ask without see, because if you look at the level 2 screen, let's say this is a level 2 screen. If I didn't have 145,000 open interest and 41,000 volume on this contract here, and I had thinly traded stuff like PCLN, if I do 200 contract, the market maker could fill me at 34 cents instead of filling me at 97 cents. Okay? Does that make sense? So you could drop, let's say you are the seller. I mean, this is very, very dangerous. You could drop that thing very, very fast if that was a thin level 2. That's why you want to trade high liquidity stuff. So the SPY, I do it, and I do it also to replace to my ES. So now let me show you why this is so much more powerful than the ES. And a lot of people don't know that. And I think this can help you change your life. Just curious, who is only a futures trader in this room? Say me. Just a futures trader. Just trading futures all day long. In and out. As E-minis, 2 points. You know, 2 point stop and enters. Well, that's interesting. Only maybe 10% of the room. So that's pretty cool. Okay, so here's what happened, everyone. And especially those 10%. Here's what you got to understand, and you got to know the equivalence between instruments. 2 contracts of the ES equal 10 at the money contract of your weekly options or the next week's at the money options equal 1,000 shares of the SPY. If you were to buy 1,000 shares of the SPY, everybody, at right now was about 184. This is an old slide. You would spend and allocate $184,000. This is not the best use of your money. Now look on the left. If you look and you trade 2 ES, you would trade safely 1 ES, $10,000 per contract to use the stop loss of 1%, which is $100, which is 2 points. So 2 contracts on the ES will require $20,000. That's much better than trading the stock, but look here, even more powerful. You can trade, like I just showed you, the SPY, 10 at the money SPY contract that expires Friday for about $1,000, a buck. Usually you'll find them between 60 cents and $1.50. So average about a buck. So now look what happened. Look what happened. You just free $19,000 from your E-mini trading to redeploy in either in selling premium and getting those weekly and monthly cash flow on the time decay, or you can redeploy even that 19,000 to trade not only the SPY but the future. So now you can hedge. You can be long. You can be long 1 ES and short 10 SPY and buy 5 puts on the SPY, which if you are wrong on your ES trade will reduce your losses, and you can have a wider stop loss on your ES. So you can do a lot of cool stuff if you understand the equivalence between the ES, the SPY, and the stock. Buying the stock versus buying the options versus buying the futures. But here's the coolest part. Look at your risk. Your risk here is 2 points, like most of the E-mini trader, which is $200 on 2 contracts. And here's the same. You do 20 cents stop loss on 10 contracts is $200. So now you risk the same amount of money to control the same power with $19,000 less in capital, but look at the rate of return. On the ES, if you do about 2 or 4 points per day, which is $100 to $200 divided by your initial capital, you will only make 0.5% to 1%, And on a fantastic day on your ES, you'll make about 5% to 10% return on your money. But look now, if you trade the SPY, look what happened. Most of the days, the SPY is going to move 40 cents to $1.50, and 40 cents, just 40 cents alone, divided to your $1 is 40%. You compare 40% to 1%, and let's say 5%, which means that with the SPY, you always make at least 8 times more money than the ES. You use 19 times less capital than the ES, and you risk the same. Is that powerful, everybody, especially the futures trader? Because that's a fact. That's a fact. Look, if you look here, the option chain, look, right there. Look at the 184 SPY. Add the money options. You can get it for 98 cents, which means you spend $980 to control $20,000 on the ES of power. This is the type of things that can change your life forever in terms of wealth creation and cash flow, everybody. Those are the type of concepts that can help you again and again and again. So again, if I go here into the goals in 2014, here's how we broke it down. 80% of my cash assets in selling premium, 20% of the assets in buying directionals, okay, and doing indirectionals, and most of them should be, especially if you are not a consistent trader right now, should be the safest instrument, the SPY, the S&P 500 ETF, okay? And I just demonstrated all of this. Now, the last but not least thing that you should do and think about in 2014, in my opinion, is be consistent in sizes or amount at risk. And that's it. It's my 5-step formula for you guys to be in the right side of the equation in 2014. I like simplicity. I like simplicity in the way we code our full Pro Tool and our DTZ analysis. In simplicity, there's beauty. In simplicity, there's you have quick reaction time. Okay, so people tell me, you know, people like the naysayers or the negative people, they're always, oh, I did 10 credit spread, but 1 or 2 I made out of 10 credit spread. I had 8 credit spread that worked and made me money, and I had 20 credit spread, and I had 2 credit spread that made me lose money. And the reason being, everybody, is because those guys, they go like this. On the first trade, they risk 1,000. On the second trade, they risk 1,000. And they risk 1,000, 1,000, 1,000, and then they go to the 8th trade, and they take an Apple, Google, PCL, and 5 points trade, and now they risk 5,000 on the trade. Okay? And the 9th trade, they do the same. They risk 5,000. They do 10 contracts because they don't know to properly size their position or the stop loss. And guess what happened? Now they take $10,000 and they wipe everything. Okay? Do you understand, everyone? This is how you wipe out your account because you're not consistent in the amount at risk per strategies. You go one time, you go risk $500, and then on the next time you think you're at the top of the world. And what happened? Now you go 10 contract on a 5-point spread, and you risk $5,000, and you blow up all the other profit. Whereas me, I'm the little turtle. Look at this. I go there, and I do 50, 100 like this every month, especially on my other account. This is my small account, to show you. But I have other accounts at Interactive Broker, Fidelity, and other places. And I am the turtle. I want to do 330, 200, 100. But at the end of the week, guys, at the end of the week and at the end of the month, those pay the bills with a high probability of success. And the guys that blow up, they blow up because they get cocky. And when they get cocky on the 5th trade, on the 10th trade, and the 9th trade, that's where they blow up. Does that make sense? Because it's very profound what I'm telling you. I'm not telling you this because I'm a guy who just talk on a webinar on a Sunday evening taking an hour of my time. You know, I'm talking because I've done this for years and years, everybody. Okay? And I do it every day with real money. And those are life-changing concepts that can happen for you. So I am done with my part. You see, it's not difficult, but you got to apply it. If done properly and correctly, with the right size, the right stop loss, can do. So now let's talk about you guys. We have 5 minutes left. Now, before we start the Q&A and your goals for 2014, I have a PDF that goes over the strategy, a free PDF, and a great training video that shows you that $23,000 that I made in 7 days in Apple, overly paying 20 times my vacation, and also the 6.6 times your money on a small account. It was a small account. I invested $2,500 less than this to make $19,000 that week by respecting those 5 simple principles. But you got to risk consistent amount of money, okay? And I don't know the link. I don't know the link. I have it somewhere here. Let me look here on my here you can get it here. So okay, thanks, Kev. So okay, yeah. So if you go to whatever I gave you, you'll get the video and you'll get the free PDF, and I think it'll help you because it'll reinforce some of the concept that we talked about. Was that helpful, everybody? Quick yes, no. And make sure you paste your copy, your questions. I'll spend about 25 minutes answering everybody's questions, but this is stuff, guys, that are life-changing. If at least you can think of your trading, whether you are an options trader, a futures trader, or a forex trader, this stuff can really, really help you to be a better trader. And so before we start on the Q&A, we want to know about you, because you know what, I have not been a newbie or someone that goes through their learning phase in trading for the past for many years, although I still learn and I still get a better trader by teaching, by being live, trading real money with my traders. When we trade live, it makes me a better trader. So by explaining the trade, why I enter, why I exit, it makes me a better trader. But I am not in the mindset really of what you are going through anymore. You know, I was at where you were going through like 20 years ago. You know, it's a long time ago. So just curious, what do you think, since we are talking about goals, what do you think is your biggest obstacles this year? When you look at your trading and you look at your trading last year, what do you think is your biggest obstacle coming in 2014? Let's look at some of the answers. Now it's all about you, your questions, and you helping me with that. What is your biggest obstacles? Denise says fear. David says psychology. Paul says not using stops. Hold on, guys, coming fast. Angela says sticking to a plan. Winnie says psychology. Shekhar, timing and stopping the reversal. Mary, by the way, good evening, Shekhar. Overtrading, Danny. Not fighting the market, Justin. That's what we talked about, the main trend and the intermediary trend. Judy, no confidence. Well, if you have no confidence, it's because you don't trust the process, and you don't trust and believe in your process. It's because you are losing. You start trusting and believing in the process when you start seeing consistent and replicable, profitable trades. I have some traders that you'll see in those training series videos like Mark and Lisa that were new traders that have a 95% win ratios on their credit spread. So there's no magic pill, everybody, in trading. There's no magic pill. There's no green light, blue light who is going to change you without repetition of the proper, consistent and replicable steps. So Keshav says, too timid. Velosky says, so, okay, so let's refine the question. What is your biggest obstacles that you would like to overcome in 2014 for your trading? That's the first layer. But then within that layer, you have to go to the strategy. What skill or strategy would you like to master in 2014? Because this is cool. This is engaging. We're all brainstorming together after this first hour that I thought will help you. So again, my problem as a Forex newbie, recognizing support and resistance at right time. So hopefully tonight with cluster high, cluster low, you learn some stuff. Take the training series for free And the PDF, it will help you on your Forex trade as well. Trade what you see and not what you feel, Larry, which is absolutely true. Good evening, Larry. Stu, yeah, Stu, I'm very sorry. He's in Australia. Thanks for coming. Greatly appreciated that the Australian guys, the European guys took their time to come and listen. Hopefully it was worthwhile your time. Finding the right patterns to trade. Okay, so let's go to the strategies. Again, what skill or strategy would you like to master this year? Some people are futures. They might want to learn options. Some people are options. They want to learn Forex. What skills or strategies would you like to master in 2014? Denny, options. Dimitri, entry. Okay, James is more like fine-tuning options. It's probably more about defending probably his options, his credit spread, his iron condors, or calendars, or whatever strategy is using. Most timing of placing credit spread. Patricia, options. Leo, Forex and stars. Zero, learning options. Tom, okay. Ken, you learn more about the selling the premium on those free training videos. Unfortunately, I got to go and answer questions. What premium sales strategy would you lose with a small account? Good questions from Joe. For a small account, I would start to try to master credit spread. I would not do naked put because you don't have the margin requirements for naked puts. You do not have the knowledge for calendar. Just stick to credit spread. One thing, option selling need more margin required, right? Guys, all the strategies that I talked about today, you can do them with a small account, refine them, start with a $3,000 to a $5,000 account, and that's all you need. Because here's what it is. Trading is like going at the gym. Even if you had $1 million account in this room, or $750,000 or $250,000 account, why would you go and trade a $250,000 account? And I have seen it, believe me, trading and mentoring guys from Deutsche Bank, from Goldman, and from newbies for the past 10 years. Believe me, I have seen guys coming very cocky with a $250,000 account and $1 million account and blowing up. And they blow up because they don't take the time with a $5,000 account or $3,000 account to master and prove that the steps we talked about tonight works. And when you take the time for 3 months to master your trading platform, master your charts, master your trade setup, do some of the steps we talked about, and prove it to yourself on a $3,000 and $5,000 account, you will not do it on a $250,000 account. It's like going at the gym and you look at a bench press. You want to bench press 250 pounds where you cannot barely bench press the bar alone, 45 pounds. Does that make sense, everybody? It takes a little time and proper repetition, if done correctly, to do it the right way. I mean, people come in this business where 90% of the traders lose and expecting that right away they are going to be part of the 10% that take the transfer of wealth from the 90% that wins. It's not possible, everybody. Okay? So everybody, I'll take your questions. I think it was great. I'll go one further more in the goals. I'm going to give you one more goal that nobody talked to you in webinars. And the reason they don't talk to you about all of this is because they don't trade real money. You know, they just talk and talk. Here's what I'd say. There's a lot of people here that trade for the wrong reasons. And you have to ask yourself, why is it that you want to be a trader? Because most of you are not consistent traders yet. And if you are consistent, some of them, you are marginally consistent. And if you are consistent trader, why? You got to understand the why in your life. So let's brainstorm 2 more minutes. Why everybody in this room wants to be a trader? And I'm going to help you peel the onions. You are going to say it's very profound. And I'm going to tell you my why. But my why, if you peel my why, let's start by, okay, why do we want to be a trader? We want to be financially free, Shekar, Ken, want to leave my job. Zero wants to add an extra paycheck. Lifestyle and money. AIC, provide for the family. I couldn't find a job. I quit my day job. Okay. Ultimately, people are want to be a trader initially to have more freedom and get out of the rat race and the system. But now you have to peel the onion one more time. One more time you have to go through that profound question. And I'm going to tell you, if you go through that profound question tonight after this webinar, you are going to say, well, that French guy is right. It's not that easy. If you go through that question one more time, besides the freedom, Leo, besides the money, Arif, besides the luxuries that you can buy with more money, and besides the money, why do you want more money? So now you are going to peel the onion one more time, and you are going to see that you want more money. Why? So let's go. Why do you want more money? Pre says freedom. So I like that. This is starting to be a little more philosophical than just money. Why would you like more money? Ken, more food. Sushi. For me, that would be sushi. Ken, more food. Dave, my children's education. That's a good one. Tamara, build another house, buy a sports car. Yeah, peel the onion. Security, improve quality of life. Travel. Robert, he wants to travel. That's why he wants more money and more freedom. Yeah, I see. Peace of mind, retirement. Judy, cost of living, property taxes. To buy my wife more shoes. Well, women like shoes, that's a fact. Angel, buy a new house and a new car. Keshav, learn the way Pro Tools. Okay, so let me go a little more deeper than that. Why would you want to buy a house? Why would you want to buy a car? What? See, if you go and you go through more and more layers of the why, what will happen is ultimately my why to be a trader was to be, when my early 20s, was to be out of the system, not in a box, not to be in the rat race, be able to do what I want to do, whenever I want to do it, and just be my own. You know, whether I am an entrepreneur, you know, which now I am an entrepreneur too, and a trader, I want to be able to do what I want to do whenever I want to do. But over the years, I realized that when you go deeper, why, everybody? I really want to be, my why is my kids. I want to be offering my kids all the opportunities that I didn't have when I grew up, and I want to have my kids leave a legacy to my kids where they are going to look at their father and they are going to see what their father is accomplishing, that I leave a legacy. I leave values for my kids, and I feel that I can become a better father and leave better legacy and a better values to my kids by having more free time to do whatever I want. Does that make sense? So you guys have to see the why. It's very important, because I tell everybody at the end of each Real Traders webinar or every webinar that I'm invited to, you got to be passionate. If you come in the morning and you are not passionate like me after 20 years looking at charts and doing the day trading zones analysis, you know, support and resistance, buy zone, sell zone at 5:45 a.m. every day, and I cannot wait until the market rings at 9:30 with my game plan, and I decide which instruments I want to trade for the day, and I have my game plan completely designed by 9:30 so that at 11 o'clock I'm done and I just execute the game plan, then it's not fun. You know, you need to be passionate about what you do. You need to be passionate about your trading, about your charts, and you need to understand the why. And what I would do is take a sticker, take a yellow sticker, and stick that yellow sticker in front of your monitor and put the why. I'm looking and staring at a computer 3 hours a day maximum because I want to be a better father, leave a better legacy to my kids, and ultimately provide more happiness for my family and myself. Okay? Ultimately, it's about happiness. I couldn't give a shit if I do another $1 million this year or not. I want this legacy. This is what's important to me. So if I have to leave the trading for a week and go on a cruise and make no money, it's fine. I ended up to make $23,000 the last time, but it's not always that way. Sometimes you lose. So what? If you have consistent replicable processes with consistent size and amount at risk, I'm telling you, everybody, now tonight you have taken the route to shift from the gambling route to being a professional trader. Okay, I'll answer some questions. It's 9:11. Kevin is telling me to wrap it up by 9:20. So hopefully this was helpful, but shoot some questions about some of the stuff. So Renko, could you please explain what is better? Sell 21x wide OTM SPY spread versus 10 2x wide X spread. Could you explain what is better? Well, Renko, this is where I do not use the one standard and two standard deviation. I'm looking at the day trading zones, Renko, and I'm looking at this. Can everybody see the yes? Quick yes, no. Here's the buy zone, the extreme buy zone. This is the caution zone in orange. This is the sell zone. Well, look, guess what? Look at this beauty. Recross the sell zone around the 48 day trading zones. Couple of days ago, like a week ago, recross, we retest the top of the caution zone, fell, caution zone fell, caution zone fell 3 times. That's the top of the caution zone. Went towards the bottom of the caution zones last week, recross, retest the yellow, boom, again toward the top of the buy zone. And if the top of the bottom of the buy zone at 37.50 reject, it's not going to be good again. So you want to trade within the zones. And when you look at your zones within the questions you just asked me, I don't know if it was David or Dan, then you add the delta or the probability in the money. But the probability in the money, the one standard deviation, two standard deviation alone is bullshit. It's not going to help you being a consistent trader. Okay, next question. AD, good questions. Where do you choose your stock? I have a watch list, AD, right there. So most of the time, again, AD, I'm trading what is liquid, which is those 6 markets. There's 9 markets on the DTDZ analysis, but I go to the full pro tool, which is that works for any instrument, all the forex pair, all the stocks, all the ETF. And I have a watch list, and I look throughout that watch list. I have a trigger within the trade setup that I showed you. If you didn't understand them, watch that video. It's a beautiful 14-minute video that we have for traders for many weeks, many months, that could be very helpful to you. And we look for the trigger within the day trading zones to get in and out of certain stocks. So I could trade tomorrow morning Bank of America, which I did, and called with our members a week and a half ago. I called Bank of America 10 days before Jim Cramer called it on CNBC this week. When Jim Cramer called it on CNBC this week, you knew that the retreat, you have to be careful. That's where you start selling. But anyway, I was on Bank of America for about 10 days, and I call it on our members area, which is well documented, you know. Okay. And so that's how it is. So next question. Shekar says Jim was long Apple at 700. Jim Cramer, that is. Manesse Robinson, good questions. Can you explain your before the market preparation? It is a webinar that I will do, and I will do this webinar very shortly. So stay tuned in our database. Check the emails. This is a database a webinar that I will do. I don't do a lot of webinars during the month, guys, but this is a webinar that I will do in a couple of weeks or whatever it is, and it will be on how it will touch about your morning prep. Nicholas, I respond to you, Nicholas. come on a Tuesday, Chart Blast, and we'll go over your CMG, Google, and PCNL. We just don't have the time. We have 4 minutes left. And the organizer, Kevin, told me to wrap it up by 9:20. Another question. What did you think of Tesla? Okay, good question from Winnie, because I was short Tesla. That also is well documented with real money videos that we did. We do action videos once a week. So I don't do them every night like other people. I do them once or twice a week with real money, and I tell you where I think something might go or an opportunity goes. I don't think it's necessary to confuse everybody, okay, with a lot of entry and exit if you don't see it. But Tesla, here it is. Tesla, if you look at the daily chart on Tesla, we went short around the 180 on Tesla. And the reason we went short is very visible here. You can see it on the full Pro Tool of the day trading zones. If I minimize the like this, you'll see it better, just that you see the charts better. Look, isn't it one of the beautiful patterns I was explaining earlier? Cross, recross, retest lower high of the day trading zones, down arrow, zoom. See, they try again a lower high, a cross, recross, or retest one more time after they went close to the support, room again, and dash to dash. Now we have up arrow, blue dot, which means that there's some support here on Tesla. But here's the problem. Look, I'm going to look at the main trend. Remember, I'm going to look at the monthly. And if that monthly fails on Tesla, which you have a MACD that is up and a MACD that is about to cross down, which is not good if it does cross down, you got to have this resistance, which became now support on Tesla, at 144.76. If you have a weekly and a monthly test closing below that 144.76 on the monthly, and look at the weekly on Tesla, below this 146, so you have a 144.50 and a 146. If we push and close below those, it's game over. Tesla will go retest all the way the support within the monthly and weekly trend of 133.50. If it does come to 133.50, guess what? Am I going to buy or sell? Remember the main trend, up arrow, blue dots now on the weekly. Would I buy or sell? No way I see. Because I want 33 here, do I buy or sell? I would buy. I would sell out of the money credit spread, so you have a little buffer to around 125, 120. So if the entire market goes down within the next couple of weeks, and that Tesla and the tech stocks reject, and this thing retests that 133 area, guess what? I'll be buying. Okay? Why? Because up arrow, blue dot, 60% chance of a continuation of the trend on the main trend, but I need this retracement. That again, you need with the full Pro Tool to know how far do you need the retracement. So you have a first line of defense on the monthly at 144.50. Now 144.50 breaks, all goes to 133, 134 area. Okay? Let's take a last question. Okay, good question from Renko. When you do credit spread, is it better to take a $1 wide spread, okay, a $2 wide spread, or $5 wide spread? Okay, Renko, fantastic question, and that's a great question that can save you a lot of trouble. I told you earlier on, a lot of people that lose in credit spread because it's a 70 to 95, no, it's not 95. My guys, on some of the videos, some of my guys do 95% chance, and you'll see there's a great video from Mark and Lisa that you'll hear where those guys talk to you. They talk to you and they show you their entry, their exit, and they show you what it takes to be a consistent trader with our entry and exit sheet matrix that you have to monitor. But here's what happened. If you take a 1-point spread wide for a credit spread on the SPY, I use 10 contracts because I'm willing to lose $1,000. But now if I take a 2.5 wide spread, okay, now I'm using 4 contracts. I'm reducing the size because I still risk $1,000. I'm consistent in the amount at risk that I'm losing, that I'm willing to lose, $1,000. Now look, if it's a 5-point spread, Google and Apple, guess what? Now I'm going to use 2 contracts because I'm willing to risk $1,000. Where things go wrong, Ranko, on your question, is the guy makes money here on the 1-point spread, he makes money on the 2.5 spread, and he comes here, and guess what? He used 10 contracts. Now he just lost $5,000. This is where it goes wrong. And when a spread goes wrong and you don't have the proper support and resistance with the proper strategies, and it's not done correctly, then, and you don't know how to defend spread, there's strategies to defend spreads, iron condor and calendars that you need to know too. Okay? Hopefully it was helpful, guys. Thank you very much for coming. Hopefully it was helpful. I enjoyed the session. I enjoyed the interaction with everybody. I urge you to get that free report and that free video. I think it will help you tremendously to reinforce a lot of the stuff that I went through tonight. You have a good evening, good trading, and think about everything we talked to. See how we can help your trading. Thank you very much for taking the time on a Sunday evening. Cyril, Patricia, Angela, thank you for the feedback. Larry, as usually. Nicolas, it's always a pleasure. A Nicolas to another Nicolas. Josephine, Winnie, everybody, thank you very much.
Thank you,
Good
Mark.
evening.
Thank you, Mark. As always, guys, as promised, you could see that Mark comes and he absolutely just, pulls back the curtain and just gives away the farm. And we can't thank him enough. To answer your questions, guys, I've been getting a lot of questions about, they want to know, you guys want to know more about Mark. All you have to do, if you look at the chat area, is you'll see the link that says realtraderswebinar.com/DTZ free. If you click on that, you'll be brought to a page where if you scroll down, you'll see a form where you could put in your name and email address. Just put in your name and email address, click the submit button, and that will give you access to Mark's, you'll receive an email that'll give you a link where you can click on it and get the video and the PDF. And even if you're a newbie, Mark's made it so great that, I'll repost it, Abby. Mark's made it so, simple to follow that even if you're a newbie, as some people had said, you will be able to follow it. So I just posted it again, guys. As always, thank you so much for joining us on a Sunday night and spending an hour and a half with us. We can't thank you enough, guys. And we look forward to seeing you on the next event. Happy New Year, and we'll see you soon.